This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. European Union officials will hold talks in Vienna with OPEC representatives on Monday amid calls for the producer group to increase output and as the EU considers potential sanctions on Russian oil. OPEC has resisted calls by the United States and the International Energy Agency to pump more crude to cool prices, which reached a 14-year peak last month after Washington and Brussels imposed sanctions on Moscow following its invasion of Ukraine. OPEC+, which consists of the Organization of Petroleum Exporting Countries and other producers, including Russia, will raise output by about 432,000 barrels per day in May.
The European Union's executive is drafting proposals for an EU oil embargo on Russia, the foreign ministers of Ireland, Lithuania and the Netherlands said on Monday, although there is still no agreement to ban Russian crude. They are now working on ensuring that oil is part of the next sanctions package, Irish Foreign Minister Simon Coveney said of the European Commission as he arrived for a meeting with his EU counterparts in Luxembourg. The European Union is spending hundreds of millions of euros on importing oil from Russia. That is certainly contributing to financing this war. We need to cut off that financing. The sooner that can happen the better, Coveney added.
Moving on to the top news in the energy sector.
Oil prices dropped by $4 a barrel on Monday, with Brent crude tumbling below $100 on plans to release record volumes of crude and oil products from strategic stocks and on continuing coronavirus lockdowns in China. Brent crude for June delivery was down $4.29, or 4.2%, at $98.49 a barrel by 13:41 GMT. U.S. West Texas Intermediate crude lost $4.33, or 4.4%, to $93.93. Bank of America maintained its forecast for Brent crude to average $102 a barrel for 2022-23. But it cut its summer spike price to $120. Swiss investment bank UBS also lowered its June Brent forecast by $10 to $115 a barrel.
India's fuel demand rose to a three-year high in March, with petrol sales hitting an all-time peak, as the market accumulated supplies foreseeing price spikes while easing COVID-related curbs boosted demand. Consumption of fuel, a proxy for oil demand, rose 4.2% from the same month last year to 19.41 million tons, its highest since March 2019's record high, according to the Indian Oil Ministry's Petroleum Planning and Analysis Cell data as on April 9. Driven by the recovery in the transportation fuels segment, the demand for petroleum products is expected to reach pre-pandemic levels by the end of FY 2023, said Hetal Gandhi, director at CRISIL Research.
Next, we have the top news in metal markets.
Britain's Financial Conduct Authority, FCA, and the Bank of England, BOE, have announced a rare joint intervention into what happened on the London Metal Exchange's nickel market, LME. The LME suspended disorderly nickel trading on March 8 after prices doubled to a record above $100,000 a ton in a few hours on expectations that China's Tsingshan had to buy metal to cover its short position. The FCA regulates the LME, while the Bank of England regulates the exchange's clearinghouse. Both also regulate many of the banks and investment firms who use the LME.
Aluminium prices fell to their lowest in more than 3 weeks on Monday as COVID-19 lockdowns in top consumer China fueled worries about slowing demand for industrial metals. Benchmark aluminium on the London Metal Exchange, LME, was down 3.7% at $3,249 a ton in official rings. Prices of the metal used in transport, packaging and construction earlier touched $3,240, the lowest level since March 17. Some investors may choose to take profits as the COVID restrictions hit aluminium demand in China. Smelters in Yunnan province have been ramping up production faster, said ING analyst Wen Yu Yao. We will now look at the top news in the agricultural sector. Malaysia's palm oil inventories at the end of March shrank for a fifth consecutive month as a larger-than-expected rise in exports and plunge in imports outweighed strong production growth, Malaysian Palm Oil Board, MPOB, data showed on Monday. Stockpiles in the world's second-largest producer fell 2.99% from February to 1.47 million tons, the lowest since March 2021, according to MPOB data. Overall demand rose nearly 3 times faster than supply, erasing stocks, said Sathya Varka, co-founder of Singapore-based palm oil analytics.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.